They keep telling us that inflation is going down, and while the statistics might show that, individuals and what they do every single day, clearly they're dealing with it more and more. In this video, I'm going to show you why inflation might actually be going up substantially. You came here for the truth, so let me unveil that for you. The very first thing is this. A perfect storm of food stamp cuts and low tax refunds is looming, and discount chains like Dollar General and Big Lots could feel the pain. So essentially what this article is talking about is that there's a lot less money coming from the government into people's pockets. That means they're going to be spending less money, and the place that they spend a lot of money, at the Dollar Generals and so on, saying that they're going to feel it. So they're talking about their stocks, they're talking about the economy in general, of course. That's what happens. When people don't have that money, they can't create stimulus in the economy. They can create stimulus in the banking system by throwing taxpayer dollars into it or quantitative easing, but they can't do that in this way. They have a big problem that's happening here today, and I think it's an issue we should all be paying attention to. This is another one. Gold prices near record as investors bet inflation is here to stay. Two things. Lower treasury yields and weaker dollar have also boosted the precious metal. So you can look at these statistics, and it's pretty clear that when you have higher yields, like if you're going to get more return from a treasury, from US debt, well, then people are going to put their money into that because at least they can get that return. However, with gold, if they don't think that it's going to appreciate, well, why would they put their money in it? They're saying, that's what they say, because, I need to make something back. Maybe it doesn't lose value, but I need to make something back. And so that's the conundrum that investors deal with. But right now, it's at a near record high. Be mindful of that as we move into the next aspect, and that is oil. US-Saudi oil pact breaking down as Russia grabs upper hand. An empowered OPEC Plus led by Saudi Arabia and Moscow is calling the shots on oil prices, boosting inflation and raising recession risks. For so many people, they don't realize how this has become where we are today. Think about it. The petrodollar has been put in place for decades, and that means the US dollar is essentially having a monopoly over all other currencies, because when they price oil, they do so in US dollars. And think about how important oil is as a commodity. But that's changing right here and now. There are new developments that have been going on. Are you aware of them? Well, if you've been watching the channel, certainly you have been aware of it, but essentially what we are looking at is all these different countries from the Middle East and onwards east. All of these countries seemingly are joining up with China, Russia, and the rest, the BRICS nations. This BRICS is no longer just these few countries. Whether or not they're officially in or not, the alliances are there. And they say, we want to do business outside of the US dollar. And not only do they say that, it's not just rhetoric, they're actively doing so. And that puts a real big problem in there for the US dollar, for the monopoly status. The reserve currency status, which stands less than 59% of total reserves, is slowly but surely diminishing. It's a long way away, as I always like to say, but we are now at that time in which it becomes something we must pay attention to, because that pace is increasing faster than we've ever seen it. Look at this. The Saudi-Russia oil alliance has the potential to cause all kinds of trouble for the US economy. This month's OPEC Plus decision to cut crude output for the second time since Biden flew to Saudi Arabia last summer, seeking an increase, may be just the start. So instead of increasing, the US, at the same time, remember, they're drawing from their petroleum reserves. They're doing so, and they're not getting more from OPEC. And that's a big problem. Now, are we going to see shale? Are we going to see US oil picking up the leftovers? I'm not so sure. I'm really not so sure. However, if oil remains above $80 a barrel, it starts to look much more attractive. But like we've talked about, many of the big players in the US shale industry have specifically said this is not something we want to invest in anymore. They don't want to do more of that, knowing they're not going to get the deals they did before, knowing that they might be restricted and all these different things put in place in order to cut from their profits or hinder their business in any way. All right, now that's big. Here you can see OPEC seeing demand in oil climbing, which is at odds with the Saudi-led production cut. Production cartel still expects demand for crude to rise this year. So they're cutting production at the same time they see demand rising. Do you not see a problem with that? Usually you would increase the production in order to, deal with that demand. Not the case right now. Something big is going on. Oil holds near 5-month high as US and China show tighter market. You can see it right here, right now. Looking at the numbers, it is very clear that there's a lot of speculation going on in the oil industry. And so we're going to see that with what traders like to do with this. They're going to drive that price up potentially. Where it lands, we'll see. And this, of course, is what it's all about. Falling inflation may be too late for retirees. You got to think about this. When oil rises in price, it's not just oil. It's not just gas. It's not just petroleum products. It's everything. Everything relies on oil. Transporting things from point A to point B relies on oil. And that means whatever you have to buy is going to be more expensive. And that doesn't come down. Even if the price of oil comes down. How many times have you received a delivery, food delivery, whatever the case may be, and they have that gas tax? They like to add that, we just added $1 in there. We just added $2 in there because the price of gas had gone up considerably. Okay, then the price of gas went down considerably. Well, what about that gas tax? It's still there. That's how they do it. Inflation doesn't come down. Whether it's coming, from the wholesale side, the producer side, or whether you're going to see that as the end user. Ultimately, you got to pay for it. You're going to pay one way, shape, or form. You're going to pay with inflation, or you're going to pay directly. And so I see that. I think this is the big issue. That we must be aware of it, and we must take advantage of it. And what I mean by that is, if we know things are going to be more expensive in the near future, why in the world wouldn't we want to get it at today's price? Isn't that just a no-brainer? Would seem like it. Okay. De-dollarization has started, but the odds that China's yuan will take over are profoundly unlikely to essentially impossible. Now, I've heard that before. I've heard a lot of people talk about this, and they think to themselves, what exactly would happen to the Chinese yuan? Is it going to be the new reserve currency of the world? Well, that would be a tough sell, of course. But if you look at a lot of these countries, they're saying, we don't want to do business in the US dollar. That doesn't mean they're not going to do business with the US. And that doesn't mean they're not going to do business in the US dollar when needed. But they're expanding their options. And that right now, 2023, is a big leap. A huge leap, in fact. We haven't really seen this type of behavior coming from so many different countries all at once ever before. This is kind of like what would happen after World War II, where all the countries got to meet together and decide, what are we going to do? They set up the World Bank, the IMF, all these different institutions. And right now, we're kind of seeing elements of that in a sense. So with oil, we have to look at it, and you got to think to yourself, if the price continues to go higher or remains elevated for a period, how is that going to affect me? What can I do about it? Well, as I mentioned in my books, You can invest in that which increases in price. So if you think oil is going to continue like forever, or at least for the next year, 2 years, 5 years, you thought oil was going to be the one to be in, it's going to be more expensive because of inflation, because of production cuts, whatever the case. Well, why not invest in oil? Invest in an oil company. Somehow get your money, your savings invested in that, because that's what you think. You don't have to just do what others are doing. You got to realize, I think this because of these facts. I have supporting evidence. And as a result, this is the action I'm going to take. And that's what it really comes down to. So for a lot of people, they need to be actually taking action on the information. In this case, we're talking about oil. What can you do to reduce your dependence on the system? All of these things, really key, really important. And I want to thank you for being here today. Don't forget to subscribe to the channel. Each and every day, I'll bring you the latest and greatest information. I'll see you tomorrow. Take care.